Global equity markets did decrease last week, and there was definitely a sense of risk aversion coming through. European markets were affected by the announcement from Danone that their medium-term outlook is not looking as rosy as previously thought. Remember, Danone is the world's largest yogurt maker and also produce Evian water. They have indicated that their major markets have been grossly affected by the recession, and this is affecting sales at this present time. Over a longer term, infant formulas and baby foods are going to perform pretty well, especially out of emerging economies. However, over the shorter term, they are faced with some issues. This does indicate to me that even though dairy commodity prices have increased significantly over the past few months, companies at the retail level are still faced with some demand issues. The New Zealand dollar had a mixed week last week. On Thursday morning, it was trading at 74.50 against the US dollar. However, later in the week, due to some media announcements, it did weaken off. First off was the announcement of receivership for Boston Finance, one of New Zealand's troubled finance companies. Then also the Treasury was out and indicating that the Reserve Bank should keep the official cash rate low for an extended period of time. Then of course the Labour Party also indicated that the Reserve Bank could influence the currency and thereby make it more stable and more competitive in the global marketplace. This, coupled with weaker global equity markets, has meant that the New Zealand dollar has weakened off. By Friday afternoon, it had weakened by 1.5 cents. On Monday morning, it is trading at around 72.40 against the US. US imported cow prices have edged back about 1 cent over the past week. Here in New Zealand, scheduled prices have been fairly flat, and this is likely to be a result of weaker supply coming into slaughterhouses. It is interesting to note retail prices in the US market at this present time. Beef prices have edged up over the past month, which is positive for the industry. However, they are well back on last year levels. It is also interesting to note the other competing meat proteins in context of the whole industry. Beef is currently priced at an average of around $3.85 per pound. Pork is priced at around $2.85 per pound and chicken at $1.75 per pound. These competing meat proteins are priced much lower than beef, and so there is no wonder that beef demand has been falling and is likely to be pressurised over the coming few months.